Inflation hit the highest level since 2014. Are you concerned about inflation? Because the market seems to be.
Well, as I thank you for having me on your show. The inflation figure, it has one that has been anticipated. When we were discussing the tax reform package, we did mention to the public to expect an inflation uptick of roughly 0.7%. And that has happened. And it comes from several factors, but not really all from the tax reform. First of all, there have been there's been an increase in oil prices, and that has helped boost inflation rates. The peso has depreciated a bit, basically caused by the increase in interest rates in the U.S. And those two factors, plus bad weather, have affected prices of vegetables. The off-fishing season has affected the price of fish. And strangely enough, our successful efforts in collecting taxes from cigarettes has actually boosted our inflation rate 0.2%. So all of these factors have caused the slight uptick in inflation rate.
You talked about the peso, which has depreciated, in your words, a bit, but it is actually the worst performer in Asia over the past 12 months. Are you not concerned about a depreciating currency?
We have about 12 million people working abroad, and they have families back home, and they send their hard-earned foreign currency back home. I think it benefits them a lot that the peso value has dropped a bit. And, you know, again, when you say worst performing currency, you're looking at a very short period of time. If you look at a period over 10 years, we're just about average for the whole of Asia. And as I said, again, I'd like to repeat it, probably we have 50 million people who rely on who rely on foreign workers' earnings. We have a very healthy business process outsourcing industry, which brings in around $25 billion a year, and that helps us be more competitive. Our exports have become more competitive in the world and have gone up significantly since the peso value has gone down.
Philippine growth has been in excess of 6%, yet when you take a look at FDI, foreign direct investment, it's still lagging behind nations which are way smaller, like Vietnam. Why is that, and will that be revised?
Well, one of our basic problems has been that we lack, we've been falling behind our neighbors in infrastructure. And we have, you know, it's very expensive to move goods in and out of the Philippines. So that's why we are spending a lot in improving our logistics with better ports, better airports, better roads, better bridges. And we think as these come into play, we will see a large increase in foreign direct investments. In fact, last year we exceeded our target by almost 10%. So we had $8.7 billion come in last year. So we think that trend will improve.
I want to talk about funding, because to pay for the infrastructure plan, there are plans in the offing for Samurai and Panda bond issuances. Give us a sense of when and how much.
Essentially, our funding plan for our infrastructure, around 25% of that will come from increased taxes. The balance will come from borrowings. We will of the borrowings we will do, we will source about 75% locally from the local peso market, and around 25% from abroad.